Hi there, traders. This is Brad Gilbert with today's trading action. All right, now let's just go to the charts quickly. The US dollar is starting to roll over a little bit, right? And I sort of mentioned this the other day. Like the dollar is just has just been going up, right, in a very nice sort of orderly fashion. But the one thing that stood out to me was, the yields, right? These yields are lower interest rates. So it should be a lower US dollar value. So we're starting to see the markets recalibrate the value of the dollar with the interest rate yields in the US, right? And that's where we're starting to see things just roll over a bit. Now, it's a long time from before we sort of start to say that the US dollar uptrend is over, but on the hourly charts, we are starting to see things kick through. Now, I'll come back to the Aussie in just a second, but dollar yen drifting, dollar Swiss drifting lower too. The safe havens in play, gold at record highs, all things going on. Now, the Aussie. We had Aussie employment figures out today, and it was a bit of an interesting read because I actually sort of missed the actual release, which is quite annoying because the numbers were pretty crap, right? The actually, let me just come into the main calendar. If we look at the participation rate, it was slightly up. Unemployment rate out by 0.2%. That's a big change in employment. So a few more people looking and a higher unemployment rate, right? Full-time employment up 8.7 thousand. It was down minus 40 before. Employment on the weaker side of the forecast, right? So that's going to put downward pressure on the Aussie. But you know what? The dollar has got weakness. Had the US dollar not been falling like it is against most things, like you can see the sterling and euro going up, the Aussie would probably be at least 100 points lower, right? So that's the difference. So we need to sort of factor this in because, and as we sort of move forward, sorry, let me just sort of change the subject there. We will be adding the interest rate tracker here from Financial Source. And this is where you can sort of start to gauge where the impact will be. Now, the RBA, if I just look at that one there, the most likely scenario was a cut of, like it was around 53, 55% this morning. That's gone up by about 20%, right? The likelihood is a cut from the RBA. Now, there's a few central banks here that have got line ball decisions. These are all pretty much tradable, right? And today we have UK data coming out, right? 84% factored in, no change, right? So that means if we get weaker data, the larger portion of the market is going to have to factor that in, and that will see sterling lower, right? You've got the Bank of Japan. It's a toss of the coin. The RBA, well, it's not exactly a toss of the coin, but it's in play. And the Bank of Canada also, right? 63.37. That's enough for the data to really come back into play and start messing around with the direction. So right at the moment, right, as we look at the major currency pairs, if I just come over to the daily charts, you can sort of see there, we aren't exactly like the dollar uptrend is not over, right, by any stretch, but we have got the recalibration with the US yields, and that could create some short-term trading opportunities around these data releases, right, and or actually just short-term intraday trades, right? They are there, right? I've spoken to a number of traders. They are taking cash out of the market, not looking for the big ticket trade just at the moment. That's the key to it, right? The high probability, low risk trades aren't there just at the moment. The markets are very reactive and you need to be aware of that, right? There's nothing really coming out that's going to impact the US Treasury yields in Europe, obviously. But as we come into that North American session, we do have some opportunities, right? So if I just scroll down here, looking at the rest of today's trading action, you got GDP numbers, manufacturing production numbers. Keep an eye on these two in particular, right? That is going to sort of shape the direction for sterling. What was it? 83%, no change of rates. Weaker numbers here gives us an easy trade. But once again, like the Aussie, okay, the sterling is going up, the dollar's going down. So if you're looking at that, you might go, well, you know what? We get stronger UK data. It works with the short-term trend, right? Short-term trades are generally the go. Now, as we come into the North American session, we've got a bunch of different things, right? You've got the Philly Fed Manufacturing Index, a well-respected number. You've got the PPI, retail sales, and then you got the weekly jobless claims. So there's a bunch of numbers here coming out in the US that could really shape the direction of the market going forward, right? So just having a look through, the live signals just at the moment. There's not much of a matchup here in the Asian session, but that may change very quickly as we get into the European session, right? So make sure you check the live signals to really, shortcut your analysis process. Keep an eye on the calendar. We've got actionable, tradable markets. Looking at the short-term numbers, right? So just make sure you've got your charts tuned up. You know where momentum is in the market. And start to work with that. Just take out, if you can take out $500 or $1,000 each day as we go through waiting for the best trading opportunities, that's going to sort of start to build your account, right? So that's it. The US dollar rolling over, right? Dollar Swiss is heading for the hills. Like euro is making sort of hard work of it. Sterling a lot easier, and we've got sterling data today. Aussie, well, that's going to be a bit of a conundrum. Aussie weakness with US dollar weakness. It's hard to work out where that's going. If anything, you look at for those traders looking to work out where the trade is, look for the ones that are recalibrating. Aussie Kiwi, right? That's obviously had a very good move. Aussie's going to be softer against all these pairs. Euro Aussie, sterling Aussie up, and Aussie CAD down. So I'll be trading the Aussie with a soft tone. And coming into the UK data, we get, as expected, or stronger UK numbers. Sterling Aussie's got to be the one you're on, right? Because that gives us the natural fundamental trade. Strong UK fundamentals, weak Aussie fundamentals. We're into the trading opportunity there. All right. Okay. So anyway, I've got a number of updates coming for you. We've got the new site to be launched very shortly. As I said, it's going to include a whole bunch of new funky details, like the interest rate tracker, right? That's going to really sort of set you alight and really allow us to isolate the best trading opportunities, especially around those fundamental numbers. All right, guys, that's it from me. I'll give you some more updates tomorrow, and we'll go from there. All right, guys, have a good one. All the best. Cheerio.